All right, let's talk about Plasm on day 69, because something really fascinating is happening. We're seeing this massive split. On one side, you have pure, unfiltered fear in the market, but on the other, you have this incredible, rock-solid conviction from holders. So what is actually going on? Let's dig into the data.
This slide pretty much sums up the entire conflict right here. The Fear and Greed Index, it's screaming extreme fear with a reading of just 20. But at the exact same time, look at what holders are doing. Staking has shot up by over 15%. This is emotion versus action. Let's break down which one is telling the real story today.
Okay, so first things first, we have to acknowledge the fear. It's not imaginary, it's absolutely real, and it's being driven by some pretty jarring numbers that you just can't ignore. This isn't just a vibe, it's a direct reaction to some serious price movement.
And here it is, the headline number causing all that anxiety. In just the last 48 hours, the price of Plasm has dropped 34%. Look, a move like that is going to get anyone's attention, and it's for sure fueling a very fearful environment right now.
This feeds right into the broader market sentiment, which, as we saw, is sitting at a dismal 20. A reading this low signals absolute maximum pessimism. It's the market basically saying it expects the worst to happen. But the big question is, are holders actually behaving that way?
And then, to add another layer to the story, the protocol's own safety net, the base floor price, has dropped by 43%. Seeing that backstop move down can definitely be unsettling. So when you put all this data together, yeah, the fear is completely understandable.
And this, right here, is the crucial question. This is where the whole analysis pivots. We've seen the price, we've seen the gloomy sentiment, we've seen the floor drop, but what are the people who actually own Plasm? What are they doing with their tokens during all this chaos?
So let's shift gears, because when we stop looking at the price chart and start looking at the blockchain, the on-chain actions of holders tell a completely different and frankly, a much more bullish story.
And check this out. This is just incredible. While the price was tanking, more than 15,000 Plasm tokens were added to the staking contracts. That's a 15.4% jump. And get this, it's the largest two-day staking increase in the entire history of the protocol. People aren't panic selling. They're doubling down and locking up their tokens.
And even with some new supply coming online, a massive 64% of all tokens are still staked. And just look at that tiny little sliver for Liquid, only 2%. That shows an unbelievable commitment from holders who are clearly thinking about the long-term health of the protocol, not short-term price swings.
And you know what else? The core engine of the protocol is just humming along, completely unfazed. The USDC pools, which are a key sign of the protocol's health, have been growing for 8 straight days now. It shows the actual yield-generating mechanics are totally separate from all the market drama.
Okay, let's circle back to that floor price, the protocol's backstop. We know it dropped, and that sounds scary on the surface. But to really get what's going on, we need to look under the hood at the mechanics and see where the price is now in relation to it.
So the drop wasn't random or a sign of some failure. It was caused by two very specific technical factors. First, the price of eShare, which backs the whole thing, dipped a bit. And second, some new supply from token releases got absorbed. These are just mechanical adjustments, not a crisis.
And here's the key takeaway about the floor, the part that really matters. Despite the drop in both the price and the floor itself, the current Plasm price is still sitting a very comfortable 70% above that base floor. There is a huge cushion there, a strong layer of defense.
Okay, but we can't just talk about today. We have to look ahead. Part of the fear isn't just about now, it's about the big token releases, the so-called cliffs that are coming up fast. Let's face that pressure head on. Today's release is tiny, a drop in the bucket. But in just 7 days, we have a release of over 173,000 tokens. And then, just 2 days after that, on day 78, the big one, almost 2.3 million Plasm gets unlocked. This is a well-known source of anxiety in the community.
But now, this is where that recent price drop gives us a fascinating, almost strategic silver lining. Think about it. At the old price of 95 cents, that huge day 78 release represented over $2 million of potential sell pressure. At today's price of 51 cents, that pressure is cut almost in half, down to just over 1 million. In a weird way, the market has already absorbed a huge chunk of that future event's impact.
So let's bring it all together. We've seen the story of fear, driven by the price on the screen, and we've seen the counter story of conviction, driven by what people are actually doing on the blockchain. So what's the final verdict on day 69?
It really does boil down to this simple comparison. You've got one indicator, the Fear and Greed Index, that measures emotion, and it is flashing pure panic. Then you have another indicator, staking volume, that measures concrete action, and it's showing the highest conviction we have ever seen.
And that just leaves us with his final thought. When you're trying to figure out what's really going on, you have to decide what matters more. Fear is a powerful feeling, but it's just that, a feeling. Staking is a deliberate choice, a committed action. And on day 69, those actions are speaking much, much louder than the fear.
And as always, just a quick reminder, this content is for educational and informational purposes only. It is not financial advice. Please always do your own research before making any investment decisions.